stocks extending losses after a tech-led sell-off on Tuesday. Rising Treasury yields weighing on the market. Joining us now, we've got Adam Coons, who's the Winthrop Capital Management Chief Investment Officer. We're in the middle of the first trading week of 2025 here. How should investors be looking at their 2024 portfolio performance to make decisions for this year?
Well, I mean, first, you got to be happy with 2024. You've had 2 years in a row of, over 20% type returns from equity markets. Fixed income markets are another story, but I think you've got to be pleased. And the downside of that is I think when you look forward and when you measure valuation with just kind of the run up in stocks, you do need to kind of temper your expectations of where returns can go in the next couple of years. I don't want to say that that means that markets are going to go down, because I don't think that's true. But I think to expect you're going to continue to see double-digit type returns from equity markets over the next couple of years is probably a lower probability at this point in time.
So what are the sectors that you believe are at risk in 2025?
Well, you want to jump to the conclusion that it would be tech and communication services, but I'm not really convinced of that yet. There are some pockets within those sectors where valuations are a bit stretched. When you look at something like NVIDIA, I think that's difficult to swallow. But frankly, when you look at something like Meta or Alphabet, Alphabet's still trading at roughly 23 times earnings. I think that is a great value for that type of company. So I don't think valuations are necessarily stretched there. One of the places that I'm looking at is energy. And I think it really just depends on kind of the direction that the next administration takes it. But I think the idea that we kind of increase the amount of production here in the U.S. isn't necessarily good for those energy companies, because you're likely going to see energy prices come down if you flood the market with supply. So I think energy is a place that I would be cautious. And then secondly, just really anything extremely cyclical when you're looking at the consumer. Really the driver of equity performance over the last couple of years and this resiliency of the U.S. economy is driven by consumers. And I'm just fearful, and I want to be defensive against, the consumer continuing that kind of behavior when you look at just, where their spending habits can continue to go, where credit is, because it is, the extension of credit card debt is quite high. So that just gives me pause and caution on consumer-facing sectors.
And so as you think about some of the inputs that you're considering, and on the more macro side, economically, what is your biggest tip for people that are looking at some of their 2024 successes and perhaps where they wish they'd done a little bit better in their portfolio in 2024, and then looking to 2025 for some of their decisions?
Yeah, the first thing is never look backwards on what you missed out on and let that drive you into a decision in the future, because that FOMO, as they call it, gets every investor in trouble, even the most professional. So from experience, I think that stay away from that. But when you're looking forward, I think, continuing to invest in momentum. Momentum is a strong force in markets right now. And I don't think you want to get in the way of those right now. I think, do you want to have your finger on the trigger to move more defensively if things change? Absolutely. But in the short term, momentum, and I'm speaking not just in stock price momentum, but when you're looking at earnings momentum in companies where you are seeing growth and it's continuing to grow, I think you want to stand behind that until you're shown something different. And so for me, I think when you're looking at, if I'm looking backwards to 2024, what worked, and trying to decide what will work in 2025, I think it's going to be a lot of the same. So until something changes in the U.S. economy, I think you want to continue to ride that momentum factor for now.
Adam, one of the other things that you're tracking as well is the kind of geopolitical and more largely the international investment opportunity as well, amid some of what's anticipated in some of the heightened geopolitical tension here, that seeming to get ratcheted up even more so as we're just inside of 2 weeks until the inauguration day. All of those things considered, how are you evaluating some of the international markets right now, or even companies that have the largest exposure to international markets?
Yeah, a few components there. And I think, when we're trying to look at diversifying a portfolio, an obvious way to do that, to diversify away from the S&P, is to look internationally. The trick right now, or the trouble, is that U.S. still is the best place to put your money. And when you look at, obviously, Canada's has a lot of struggles. Europe is really kind of stalled out. And then, China is going to be plagued with potential issues depending on what this administration does with tariffs and the like. So I think there's a lot of uncertainty that makes it difficult to invest abroad. I do like China on a 10-year horizon. And so I really want to be invested there. I'm just trying to wait. I'd rather be late to that investment than early, because I really need to see what, like I said, this administration is going to do with tariffs. And then the second part I'm going to talk about with international is U.S. dollar. I think that's the big key for why the U.S. markets have continued to be so strong. When you look at it, so I like the Dixie index. When that stays above 100, I think it's going to be difficult for international markets, especially emerging markets, to outperform. Now, if I did start to see that roll over and get below 100, that would be the place where I would start to really look at, okay, there's probably going to be an outflow of capital from the U.S. and back in international. So that's really that kind of line in the sand that I'm watching for me to increase my allocation to international, especially emerging.
Adam, thanks so much for taking the time here with us today. Really appreciate it,
Thank you.
and some of the portfolio strategy as well.